We're known for our social media and social marketing strategies. We give our research away happily. We are now giving more and more of our models away, starting with Tesla because they are so misunderstood, and because our analysts, given their domain expertise, have been disparaged by the traditional asset management world, where most have MBAs. We do not want MBAs. We do in terms of managing our business, but in terms of investing, we don't want. We think domain expertise is going to be much more important, given what we do. So, added to social media and social marketing, we have now a social distribution strategy. So Titan, which is an Andreessen Horowitz funded company, is an app that now is featuring our interval fund. And what has been astounding to us is every day, no matter what the market was doing, we have had inflows every day. Now, slow but sure.
The CEO and CIO of ARK Invest, Cathie Wood, provided an update on what she sees in the cryptocurrency market and the market as a whole in a conversation with Anthony Popliano at the Lyceum Miami, which was the site of a one-day intellectual forum held by Arch Investments. Despite her losses, ARK's flagship fund has reportedly collected $300 million in fees. As she claims, once innovation takes hold, her fund will give investors who believe in her vision a solid return because her time horizon is longer than her fall in the previous 2 to 3 years. Have a look at what Cathie has to say.
An oil demand chart, and if we're right on both electric and autonomous, oil demand, which is about 100 million barrels per day now, and has been, we actually think it's been peaking for the last few years. It got hit during COVID, isn't quite back to where it was. We think we're in the peaking process, secular peak in demand, and we think that by 2030, that oil demand will be down 30 million barrels. Now, wow. Oil demand, except for recessions, has gone down a little bit during recessions, but has been in a secular uptrend for 70, 80, 90 years. If you look back at whale oil, remember that was our primary source of energy, light, in the day. What you saw when it was clear with the oil discovery breakthroughs that oil was going to displace whale oil, what you saw was a massive increase in volatility because companies basically said, all right, game over, I'm not investing in this anymore. And until the transition was complete, there was still a dependence, of course, on whale oil. We think the same thing is going to be true here. Now, all commodities are priced at the margin. And so the expectation out there right now in terms of what actually is being produced is that the price is going to continue to move up over time. And demand is going to move up. Oil price will come back. If we're right, I just mentioned the oil price will be very volatile. The valuations of these stocks will continue to come down. That's how you will see it reflected in the market. And in terms of the ramifications generally, this is going to be a massive tax cut for the consumer and businesses, excepting energy business, which is hugely positive for the world. It is also going to, from a geopolitical point of view, it's going, the Middle East still has a lot of economic and political power because of its oil position. That is going to change. And so what we have to worry about is as energy prices, oil prices come down, how will they try and change the subject? We're watching what Saudi Arabia and UAE are doing. They're both shifting. They understand. They may not agree completely with our thesis, but they know they have to diversify. So they're both diversifying into innovation, actually. UAE probably more methodically, I would say, than Saudi Arabia. It's interesting, this week, yesterday, there was an article in the Wall Street Journal about the UAE not leaving OPEC. And I'm saying, oh man, this is really interesting. Whenever Saudi Arabia and the UAE disagree, the oil price is on the threshold of collapsing, because Saudi Arabia has the highest reserves of oil. And it is in Saudi Arabia's interest to control the price. Don't let it go too high, because you want the demand to be sustained. Don't let it go too low, because you can't fund your finances. UAE, some parts of the UAE are hardly dependent on Dubai, for example, is only 5% dependent on oil. So they don't have exactly the same incentives. In fact, their incentives probably are to increase production now to maximize, if we're right on what's happening here, and I think they believe we're right, then it is in their interest, if they can, to maximize their oil production now, you know, if Saudi Arabia is going to be the offset. So I've seen that happen a few times, and each time there's been a rift, the oil prices come down dramatically. So UAE came out and denied it, but hey, where there's smoke sometimes, or thou dost protest too much, you know, we've been here. So we'll see what happens, You know, I think one of the things that I love about Bitcoin in particular is my economics background matters. And so here are all of these developers and young people very interested in the space, and like, I want to learn from them and they want to learn from me. So it's been fun. It's brought in probably all of my expertise from an investing point of view and from an economic point of view. And it's wonderful, you know, that this can bridge that gap, you know, the economics and the technology. In the early days, so we started our research when we were at AllianceBernstein first. That was 2011. Founded ARC 2014, did the research, and in fact, when we first broke out the 5 major innovation platforms, we did not have AI and blockchain there. We had instead we had that in mind, those in mind, but we had next generation internet. And as we started doing our Bitcoin research, I brought in Art Laffer, who's a very well-known economist, known for fiscal policy theory as well as monetary policy theory. And he agreed to collaborate. And when he said, this is what I've been looking for. Ever since we went off the gold exchange standard in 1971, a rules-based global monetary system. And I said, oh wow, how big could this be? And it was only a $6 billion, we called it network value at the time, market cap. He said, well, how big is the US monetary base? And I said, well, it's 4.5 trillion. And now, of course, it's 8 trillion, 7.5, 8 trillion. He said, well, there you go. And so I bought personally, you know, and
that's a big number, Art.
And in fact, Chris Berniski was our analyst at the time, and there was no vehicle to put it in our funds. GBTC was just coming of age, and we were doing our due diligence, and so I bought $100,000 worth just personally, and Chris became like. Here I am, the portfolio manager, and it was his research that moved me to do this, and like it was so early, and so he doubled down on his research, and it was
it's bad if your boss loses money because of your research, right?
But then of course, you know, the rest is history. I guess we're at, is it 300 billion-ish
something like that, yeah.
Now, and many people know that we think that's 300 billion in market cap or network value at $24,000. And we have in big ideas, again, our forecast for 2027, I think, is around 650,000, and beyond that, 1.5 million.
Say that again. In the Big Ideas research that you guys published, what are the two numbers?
The two numbers we have, our base case is roughly 650,000 for 2027. Now that has come down. We were using 1 million plus 4 or 5 years out, but because we've had the debacles associated with centralized, opaque institutions, as opposed to decentralized and transparent, institutions are going to hold back a little bit. But we still think that the million plus is right in our bull case. And you can see how we build our case and look at the assumptions, how much institutional involvement and so forth. Very conservative assumptions. And our conviction actually has grown through this year, grown through this past year, because FTX, Celsius, 3AC, Voyager, all of these were centralized, opaque institutions. They went bust. And even the centralized, regulated institutions, now we're looking at Genesis, probably bankruptcy, yes, Silvergate, these are regulated.
What do you think about Cathie's ideas in this case? Do you think her 5-year horizon will disprove the skeptics? Submit a comment. This concludes the video for today, folks. Thanks for watching, and we'll see you in the next one. If you found the content valuable, please think about liking and subscribing to our tiny channel by clicking the like and subscribe buttons below.